Hey everybody, July recap, what's happening now and what could be happening in the future. So let's talk a little bit about what we need to look at as far as a real estate industry in the news right now. So one of the things in the news is Yellow Trucking, just one of the biggest trucking companies in the country, just laid off 30,000 people because they're filing bankruptcy. Now, what does that mean for the real estate industry? Well, one of the things that the Fed keeps pushing for is they want higher unemployment. It's unemployment for anybody is not a good thing, but that is what the Fed says they want to see. And why do I say that is because otherwise inflation is starting to head down, and they're continuing to raise rates because that is their economy, in their opinion, is too hot right now to keep inflation down, and they want to do that no matter if it kills the real estate industry or not. Another thing that we need to be we want to look at is the credit, what I call the credit crunch. And what I mean by that is this: lending standards are becoming more and more difficult. Number one, to qualify and what kind of loans they'll do. One of the reasons is our commercial, meaning commercial lending, multifamily, big project lending, is having a reset in fourth and first quarter, the biggest reset in the history of lending. 50% of those loans were taken out by local and regional banks, which already have had some challenges. So the facts are this: there are going to be some commercial lending and some multifamily lending that after their interest rates reset, they're going to give those projects back because they're worth less than what the bank is owed. So they're going to give them back. Some of the big names have already started doing that. So how will that have an effect on the banks? Tightening. I think the local and regional banks are in for things getting worse before they get better. Another little aspect: rents for the first time in the year are negative. So meaning this time last year, right now it's less expensive than this time last year to rent a house nationwide. Okay. Another thing that we need to look at is what has happened in the last 3 weeks. Interest rates went up. And from each week we send out the report with the market update for the Portland Metro, Clark County, and the Salem, Polk, Marion County areas. So 2 weeks ago, pendings, and why it's important to talk about pending sales. Pending sales are today's deals, not solds are from 30 to 60 to 90 days ago, okay? Pending sales are recently put into contract properties. So 2 weeks ago, we were only down 3%. Last week, we were down 7% less pendings than the year before. And this week, we're down 10% less than a year before. Why? Interest rates. When interest rates go up, less people are in the market. Affordability goes down, so it just means less people are in the market. That being said, as you can see in the reports, we just do not have a lot of homes in the market, and that is why we have not seen home values go down. If they've went down at all, it's very insignificant, except if you're unfortunately in the Pearl District or downtown South Waterfront, which is still a major challenge. So if we could see interest rates get down to the mid sixes or even lower, I would say fourth quarter is going to be very, very strong. Otherwise, I think it's going to be let's just say a longer day on market real estate. But by no means is there going to be a crash. You can't have a crash when there is such low supply. And even though our demand is down dramatically as well, demand is still outpacing supply. One of the things that I've recently looked at is worldwide home values. And compared to most major countries in the world, our affordability is still better than those countries. And remember, most of those countries don't have a 30-year fixed mortgages. So those countries could be in a little challenge with their banks. But remember, their banks are also affiliated with our banks. So that's why that credit crunch could be a challenge here going into fourth and first quarter. Hopefully this gives you some insight. Until next time, you can always reach out to us with any questions. We look forward to serving you. Have a good day.